Most beginners lose money in options trading not because options is bad, but because they don't know what actually they are trading. Good morning, welcome back to the channel. I am Yug. If you also think that options trading is gambling and you have seen people make lots of profit and losses, this video will definitely change how you think about options trading forever. Options is a contract and not a stock. It gives you a right but not an obligation to buy something at a fixed price at a fixed date. Now this something is called an underlying. This underlying asset can be Reliance, ITC, TCS, even indices like Nifty, Bank Nifty. The important thing to note is that when you buy options, you are not buying stocks. Rather, you are buying contracts. And like any other contract, these contracts have an expiry date. So the timing is everything in options trading. There are only two types of options, the call option and the put option. If you expect the prices of the underlying asset to increase, you buy a call option. And if you expect the prices to go down, you buy a put option. It's a simple rule. Prices up, call. Prices down, put. Now comes the most confusing part of options trading for the beginners, the strike price. Think of strike prices as bet levels as decided by the exchange, NSE and BSE. Let's take an example of a company XYZ. Suppose it's trading at rupees 1000. Its typical strike prices will be 900, 1000 and 1100. So if you buy 1100 call option, you are saying that you expect the prices of this XYZ company to go above 1100 before the expiry. And if you buy the 900 strike price put option, you are saying that the XYZ company will trade below 900 before the expiry. But understand that the closer the strike price, the more expensive it is, and farther the strike price, the more cheaper but riskier it is. When you buy options, you pay a premium. It's simply a cost that you pay to buy a contract. For instance, our company XYZ, which was trading at rupees 1000, has a lot size of 50 shares. If suppose the 1100 strike price call option has a premium of rupees 12, then the total cost that you pay to buy that one lot is equal to 12 into 50, which is equal to rupees 600. And this 600 is the maximum loss that you can incur. That is why it is said that in options buying, the loss is limited, the profit potential is unlimited. Options have an expiry, either weekly or monthly. And here's the dangerous part, the time decay, also called theta. Even if the market does not move, the value of the premium keeps reducing. And that is why the beginners lose money either by entering trade too early and holding it till expiry and hoping rather than planning. So it's safe to say that options are a wasting asset. Let me save you some money. Avoid these 5 basic mistakes, especially if you are starting with options buying. Number 1, trading without trend. If you don't know whether the market is trending up or trending down or moving sideways, then you are not trading, you are guessing. In options buying, you need both momentum and direction. And no trend means low probability trades. The second is over trading. More trades does not mean more profits. Actually, most beginners lose money not on one bad trade, but on many unnecessary trades that they take. One good setup is enough. Market will be there tomorrow, but your capital might not be there. The third, buying FAR OTM options. No doubt, FAR OTM options look attractive because they trade cheap. But cheap does not always mean safe. For these options to work perfectly, it requires big and fast moves. And most of the times they end up expiring at value 0. That is why they are cheap. Fourth, no stop loss. Stop loss is not an option, it's a protection. One bad trade can wipe out profits of 10 good trades. And professionals don't make money and are not successful because they predict very perfectly, but because they control their losses. And the fifth point, holding till expiry. On the day of expiry, the time decay is brutal. Even if the market moves slowly in your direction, your option may lose its value. The expiry is not for the beginners, it's for the experts. So remember this golden rule and write it down somewhere. If you don't know why you are entering a trade, don't enter it. Trading is not about action, it's about discipline. Protect your capital first, profits will follow. If you are a beginner, forget profits for a moment. Because most beginners lose money not because of the lack of knowledge, but because of lack of discipline. Here are the 5 easiest ways with which you should start trading. First, trade only one index, either Nifty or Bank Nifty. When you track only one index, you know how it moves, when it traps, when it trends. And if you try and track 2 or more indices, it simply creates confusion. Second, one trade per day. Overtrading is the fastest way to blow up your account. Market will be there tomorrow, and one good trade with clear mind is better than 5 useless and unnecessary trades. Third, fixed stop loss. Before entering a trade, you should know how much you are willing to lose. No stop loss simply means you are not trading, you are gambling. Always remember that small, planned loss is always better than big, unexpected one. Fourth, risk only 1 to 2% of your total capital. Even if you make mistakes, and you will survive long enough to learn and improve. This rule alone can save your trading career. And number 5, focus on price action and not indicators overload. Learn to read candles, the support, resistance, the whole market structure, instead of filling whole of your screen with 10 indicators. And always remember that our first goal is not profits in trading. It's about survival. If you survive, you will have long enough to trade and make profits. Option trading is not a shortcut to wealth. It's a skill, just like riding a bike or editing videos. You definitely get better with time. Have patience. If you have any suggestions or any doubts, feel free to ask in the comments section. If you learned anything from the video, do like it, share with your friends and subscribe for more such videos. Thank you for watching.